So Mosaic, I guess Mosaic is the fertilizer company. They've got, and it's funny you say Orlando because they get a lot of their, I think it's their potash for fertilizers out of Central Florida. They get a lot of another stuff, I think, out of like Canada, out of Saskatchewan or something. But then they ship this stuff all over the world. This is like what grows our food. Looking at it technically, yeah, this thing seems to be they give a dividend, which is nice. Thing does seem to be going sideways. Let me go ahead out a little bit. 1 year. So they had a little bit of some undulation, but now they seem to be in some sideways channel between about 47, $48 and about $54. The only thing that worries me a little bit about Mosaic as far as turning it into an income trade is some of this gapping that I'm seeing here. So you can see that it was up here at resistance, and within 1 day, it came down to support. And so what we like to do is try to do our various trades in our income generating process at the opposite sides of the channel. And the question would be, how comfortable would we be with determining this is when we should have been doing that and this is when we should have been doing that? It looks like we'd get some confusion. Like by the time we were sure we weren't going to go any farther down, it might reverse on us and already be up at resistance. So that's my only worry. But look at it. Look at how much they're making in earnings. In addition to giving us positive dividends, returning money back to the investor, look at how much they're making in their earnings. This is like one of those companies that we talked about, like a defensive company, a company that actually does something and makes money at it. They've got positive cash flow. Another thing you might consider, especially because of those strong fundamentals, is using that naked put strategy that I talked about with Fisker and adding some of this to your long-term portfolio, because you can't go wrong with having actual solid producing companies that are making stuff and making money, right? So if you wanted to do that, let's actually take a look at the option chain. If you wanted to do that, it looks like there's plenty of options to sell. You could lock in your price at $50. If you were to lock in your price at $50, you'd be getting roughly about 75 cents a share right now. And if by the time next Friday rolls around, if you don't get your $50 sale price, buy price, then you get to keep that 75 cents a share as a bonus, and you just keep doing it until you get the price you want to pay for this thing. So I like it. I'm not sure it's the easiest to sell income against, but it might be one you want to add to your personal portfolio using that naked put strategy.
Yeah, and I just want to bring up one stat real quick. Their sales is growing phenomenally, right? The quarter over quarter, they're up 11% at $18 billion. So to your point that they're a solid company doing, solid stuff is spot on. So
I think
what
if you think about it from the headline perspective, I think there's been a huge gap. And whenever there's a huge gap in the market, there's a huge gap in the grain market because of what's happening in the Ukraine, right? And so it actually, whenever there's a gap, it means that people start to rush in different places in the world. And so I actually, know for a fact that there's a lot of people who are transitioning from corn to the grains that are grown in the Ukraine right here in the United States for the next crop. And so, in order to enrich their lands, in order to grow these different grains, fertilizer is going to be where it's at.